is run by a bunch of investment bankers, and Morningstar's tools can help make quick.
I'm Jason Stipp from Morningstar, and welcome to the Friday Five. That fooled you. It's only Thursday, but welcome anyway to a special Thursday edition of the Friday Five ahead of the Good Friday market holiday. Joining me back from vacation is Morningstar's Jeremy Glaser. Jeremy, nice to see you again.
It's always good to be back, Jason.
So what do you have for a special April Fool's Day edition of the Friday Five?
We want to make sure that investors don't play the April Fool when it comes to chasing high yields, converting their IRA, loving a stock as much as they love a product, not knowing what they're buying when they get an investment product, and finally, we have a new investment idea that you'd be the fool not to buy.
So for number one, it seems like a lot of people are chasing yield. Why might that be foolish?
If you have a money market account that's giving you about 0% yield right now, it can look really attractive to see dividend-paying stocks that are paying 3%, or to see bonds that are paying an okay yield. But these aren't equivalents for each other. They might be fine investments in their own right, but you can't just substitute them from cash because you want a little bit more yield. If you need cash, you're going to have to accept that you have that 0% return right now. You can't worry that you could get more elsewhere. If you're looking at those other asset classes, they might be good choices, but they're not a substitute. Don't get fooled into that.
Okay, good advice. For number two, I've been hearing this everywhere. Lots of advertisements about converting to a Roth IRA. Everyone seems to say it's a great idea, but is it always the way to go?
2010 represents an opportunity for investors to convert traditional IRA accounts into Roth IRA accounts. Now, when they do this, they'll have to pay taxes, but a lot of financial brokerages are out there convincing people that this is probably the best move for them. And for some investors, it probably is, but you have to make sure that you actually consult a tax advisor and you look at someone who's impartial to make sure that this is what you really want to be doing and it makes sense for you to do it right now and not wait a few years or maybe spread the taxes out over time. The brokerages have a vested interest in you moving these assets over, converting them over to the Roth and trading more often and putting more assets under management for them. They might not be the most completely impartial advisor in this. Definitely talk to your tax advisor. Don't get fooled into doing something that might not be the right move for you.
Very good advice, Jeremy. So for number three, there's lots of products out there that I love. Why shouldn't I buy the stocks of those? I mean, they're obviously lovable products.
You're absolutely right, Jason. There's a lot of great products out there, but there's a lot fewer great stocks. If you look at something like Netflix, everybody loves getting DVDs by mail. The online streaming business is starting to really take off, but the stock looks like it's trading at over twice what our equity analysts think that it's worth. And a lot of that has to do with people think that the growth that they've experienced now, that everybody loves the products, is going to continue forever. But as things move to streaming, there's going to be a lot more competitors there. You have people like Apple and Amazon already offering similar services. It's not clear that Netflix is going to have quite the advantage of scale that they do now in that space, like they do by DVDs by mail. Probably doesn't look like a very good investment right now. So continue on with your subscription, enjoy your Netflix, but definitely stay away from the stock.
Great product does not always equal great stock.
No.
So for number four, Jeremy, there's lots and lots and lots of ETFs and more every day. Is there some potential pitfalls for me to be foolish in this space?
You certainly could look foolish buying some products if you stop your research just at the name of the fund. If you look at something like USO or United States Oil, you might first believe that it's actually tracking the spot price of oil. So whatever the price of a barrel of oil is, that's the return that you're going to get. But the reality is, it tracks the futures curve, and those futures contracts have to be rolled over every month. And the process of rolling over the curves really distorts the type of returns that you're getting from that fund. So it might have a place in your portfolio, but you need to do your research and make sure you know what you're buying, or you could certainly end up looking foolish.
Doesn't mean that the fund doesn't have a use, but you have to know what you're buying.
Yeah, absolutely.
So for number five, Jeremy, speaking of investment opportunities, you've got me on pins and needles for number five, this great investment pick. Tell us a little bit about this new fund.
Well, it's an exchange-traded note that's going to track the futures contracts that are related to bad jokes on the Friday Five. So it's going to trade under the ticker symbol LAF, and we think that there's going to be a bull market in bad jokes on the Friday Five throughout 2010, and we think this is a good way for investors to gain some exposure to that.
Well, certainly, Jeremy, it seems to be that we've already gotten a leg up on that particular investment.
I think we may have.
Thanks so much for joining me.
You're welcome.
From Morningstar, I'm Jason Stipp. Thanks for watching.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.